Good morning. Welcome to our 2024 Lending State of the Union. So, roadmap to homeownership, becoming a homeowner in 12 months or less. Just kind of going through the current state of the market, what it looks like for home buyers right now, and how we can navigate through that. And, the American dream is to own your own home. And the barrier to home ownership in certain markets is really challenging to overcome depending on your economic situation or other things that affect your home buying. We are a nation of renters. I don't know, Chad, you said what, roughly 40% of people right now are renting their home rather than owning their home. So who are we? My name is Amanda. I am a real estate agent in the Northern Colorado area, also an investor, and I own multiple properties that I do just this. It's a lease with an option to purchase. So I get tenants in who maybe aren't able to qualify for a home loan, but they go under contract to buy the house.
Today is the day we get to move our new tenant buyers into the property. And this is what the best part of my job is. I get to help people who didn't think they could buy a home get into their home. We are doing a rent to own option. So our couple has sub 600 credit score. They have an eviction. They have accounts and collections that are really hurting their credit and don't allow them to apply for a home loan and even meet some rental qualifications. So we worked with them to get them on a lease, but they are actually also under contract to buy this house. How does that work? Well, we set them up with our specialized lenders and with our credit repair specialists. And through their lease, they have the option to purchase this home within 2 years. That gives them 2 years to work with these specialists to be able to get those derogatory items off of their credit, to qualify for the best loan possible, and to make this their home. So click the link below and find out how you can qualify to become a homeowner and even move into your house before you buy. That is the program we have set up. That is the road to homeownership. We want to help you get there. And if you sign up today, you'll also get a free 15-minute consultation with our credit repair specialist. Let's get you on that road to homeownership today.
That specific couple needed 2 years to qualify just due to the situation that they were in. I have several others, and I work very closely with Chad, who's a savings and lending specialist, and he has not only access to your traditional bank loan programs, an FHA loan or conventional loan, but also has dozens of other loan programs that a lot of people aren't aware of that they can get access to, even in the midst of some of the challenges that people are coming across when they go to buy a home. Chad has programs, and we've worked with other people who were able to do it in 12 months or less. It's just finding out your unique situation and how we can navigate through that. We'll kind of go into now the issues that really affect your home buying power. Most people know the basics. Credit score, how does that play into your ability to own a home? Your debt to income ratio. We'll talk about what that is and why it matters. Market value. The market is changing now with interest rates and with home values. So it's really evaluating those factors and determining how much house you can afford, what loan programs fit your unique situation, and how long will it take you to qualify. So credit score specific. When you apply for a loan, that's the first thing you're going to look at is to determine your credit worthiness, assess the risk of lending to you, whether you're likely to make payments on time. And there are so many factors that go into credit score. It can make or break kind of your loan program and your interest rate. Chad, do you want to chime in a little bit about what the average credit score is to qualify for a loan and what people are kind of shooting for there?
The average credit score in America right now is hovering right around 700, up from about 690 over the last 2 years. 700 is what we consider a good score. A really good score is 720 or 740 or higher, but 680, 660, we have programs that a lot of people fall into, and some that are below 600. We have programs that can accommodate those borrowers as well. Not as great of a term, but we can still get it done. America is a nation of renters. If you look, this is a history of interest rates, and without completely boring everybody on it, we just need everyone to understand that rates are most likely not going to go down anytime soon, and they're not going to go down enough for it to really matter. If you look at this red line right here where rates are right now, the times below that were really times of coming out of really bad situations again, right after the 2008 banking meltdown, when a lot of people lost their homes. The government stepped in and lowered interest rates, and then they were starting to creep back up. And then COVID happened, and now they've gone back up again to where they just naturally are. Most people just forgot it. Now is just as good of a time as any to start thinking about becoming a homeowner. Don't listen to the majority of public opinion, which is typically wrong, where everyone's waiting for the rates to go down.
The second thing we were talking about is your debt to income ratio. So basically, how many bills do you have every month versus how much income do you have coming in? And lenders would like it to be around 40%. There are some people that don't quite make as much, that have possibly student loan debt, medical bill debt, any kind of alimony or any other things that are pulling from that income, that maybe don't give them the best terms when it comes to qualifying for a loan. Obviously, lenders prefer a lower ratio because it suggests that you have a lower level of debt relative to your income. You have more money available to pay your loan, and that is their primary concern when they're looking at your income. Now, interest rates. This maybe wasn't a factor a year or two ago.
3% interest are gone. Armageddon will happen by the time rates go back down again. So it's better just to start game planning with what we have now. There's a lot of buyer's remorse out there. Close to 35%, 1 out of 3 people that bought houses in the big bull market of 2021 and 22 regret buying their house. They overpaid for it. They didn't want to live in the neighborhood that they're living in. A lot of people at the same time are trying to take out lines of credit on their house so they can keep their existing low interest rate mortgage. And the reason that's important is because
market value. The interest rates really are not affecting home prices. The inventory is lower. Obviously, sellers aren't selling because if they do, they're losing that 3% interest rate. They're having to move up. So the inventory is low, which means that the housing prices are still very high. Waiting for those rates to get back down to where they were, right after COVID. So it is really difficult to get in. So you have to really evaluate what kind of house you're looking for and know your budget. What does the local market look like for those types of homes? If you're looking at a single family home versus an attached dwelling like a condo or a townhouse, are you factoring in any association fees into your payment? So those are all important things that you have to plan on. So not only are you coming up against, high interest rates that make your payment higher, the home prices are staying high. The top 5 reasons that people don't qualify for a home loan, as Chad mentioned, bad credit, people with sub 600 credit scores, lenders are looking in the 700s. And if you don't get that, you're immediately written off of most lenders' desks as unqualifiable for a loan. Or maybe you haven't saved up as much of a down payment. With the conventional loans, they're still looking at 20%, even higher if you don't have that great credit. And that is hard to do in a lot of different situations, depending on your income level and your expenses. Again, with expenses, too much debt, everything like we talked about with the debt to income ratio, where do you fall on that number? And how does that look on paper when you get in front of a lender? Job changes. If you're going specifically, I think it's really hard for self-employed people, people who don't have a W-2 to qualify for a loan. There's a lot more that goes into qualifying that person based on their income. And then there's always, divorce, death, and disease. Those are the top 5 reasons that people don't. You may find yourself in a different situation, but ultimately those kind of lead back to the same place. Chad's going to talk to us about his loan programs. He actually wrote a book about 101 loan programs to get through life. Not everybody is going to sit down and read through all of those, but you just need to know that he's got it, whatever it is. He's got access to it, and he spends a lot of time dedicated to finding ways to get people to qualify that may not be able to. So Chad, I'm going to let you kind of go into your loan programs specific to this challenge that we've kind of created for people, and how they can work around some of those traditional lendings to be able to afford to buy a home.
FHA and VA conventional, that's what most people think of when they want a loan. And that really is the goal, because those have the best rates and the best terms. But what about those people that don't qualify for those programs? And that's kind of where we're starting from.
Hey guys, Colorado Mortgage Summit. He's got a very interesting program right now.
Okay, Chad, 20-second highlight. Then we do a 50% expense factor. Give me 2 months of bank statements to support that we're trending in the right way. Close that loan for you in 20 days.
So we allow you to buy an investment property without owning a primary, without showing any income. It's a DSCR loan. If you want this house, you want to buy it as an investment, you're okay doing that, let's make it happen. And then you can refinance that later into an owner-occupied property when it makes sense. But again, now's a good time to buy because later on, many people are going to want to buy these homes and a lot of these sellers are going to up their prices.
We'll put a game plan together for you. But if you're not trying to be a homeowner with all of these loan programs we have, then you're not really serious about wanting to be a homeowner anyway. And for all of you guys that aren't math nerds like all of us, we'll translate it later.
I have access to all of the same loan programs that banks can offer, and then I can offer more programs that the banks don't have. A new loan program that's an extra take on the FHA loan program. This will allow certain workers in America to purchase an FHA loan finally.
So yes, we've got a FHA product where we can actually qualify the borrower's income through a verification of employment process. If you're paid a combination of W-2 and cash income, you can be qualified for your total gross monthly income as long as the employer is able to vouch for it.
Let me show you some of the resources that you can use through this process because you're really not alone. Here's my website, Metropolis Equity Holdings. You can see here, I've got a few real estate projects of my own, and here are all my finance programs. I call this the Metropolis University. I've curated a lot of info as a loan originator and retirement specialist in putting these courses together. You can see the Couch Surfer Challenge right here. Usually sells for over $100 online. We're running a special on it this month. However, this webinar is not about me selling courses. I'm offering this course for free to anyone that is going to sign up today to take what we call the Couch Surfer Challenge. This is the Couch Surfer Challenge, how to become a homeowner in a year or less, and the 5 things to consider when buying a property. What loan amount you qualify for, how your credit scores affect your ability, and how to take care of them, and how to build up your credit, the different types of loan programs at your local real estate market, how to analyze it. That's the Couch Surfer Challenge course, and I'm giving this away to everybody who makes the commitment to becoming a homeowner in the next year or less. And we're putting up rent-to-own properties on our other associate website, the House Haystack. And the other key ingredient here is getting your credit repaired. Most people have some kind of issue on their credit, and the credit repair company I work with is not only highly affordable, but they are the most effective company out there that I've seen in the last half decade. At any given time, I've got 5 to 10 people working with them. Typically 2 to 3 months, they can really make some magic happen. At them working on someone's credit while my loan is in process, and we could get some things done in 2 or 3 weeks. So I wouldn't suggest that all the time, but we have made some miracles happen in that world. So if you are ready to take action, what we need to do next is we need to schedule a time for you to meet with me so we can really go through what your scenario is. And I'll give you a free consultation to kind of really digest where you're at. And when you set up a time with me, I'll also have the credit repair company on standby, reading our newsletter, the Metropolis Monthly. America's Credit Score, that's the topic for the current month that we're in. But if you are wanting to become a homeowner and you're ready to make the commitment to yourself, your family, becoming a homeowner in a year or less, then click the initial consultation link, sign up on my calendar, and let's get you going. You're not going to get there any faster by not taking action.
The best time to plant a tree was 20 years ago. The next best time is now. And we're in a volatile market and people are unsure. And that is historically proven to be the best time to really jump in and make some big moves and some big decisions.
That's the Couch Surfer Challenge. Sign up down below. Make sure and stay connected with our social media. Sign up for the Metropolis Monthly and stay ahead of the curve.
I hope you enjoyed the clip. I'll make sure and put a link down in the description box below. And if you think somebody else might find this video valuable, well, then share it with them. Make sure and smash the subscribe button and the notification bell for our next video. And until then, stay ahead of the curve.